There's breaking news on the markets now, which have turned negative. The major averages are down, and for the Dow, quite substantially down, 0.6%, a drop of 137 points. Nothing we're not used to this week, right? We'll bring in Bloomberg's Cameron Crise. Now, Cameron, I'm not going to ask you what's causing today's action, but if I were to, what would you say?
Well, I think it's the natural noise of the market you get when you're in a down, in at least a temporary downtrend. A higher volatility market means you get more of these swings that don't necessarily mean anything. People are jittery. People are obviously more risk averse. So it's sort of, everybody tries to pile in, and then as soon as it runs out of steam, everyone sort of piles back out. I don't think you can necessarily interpret it the same way you would, say, a 20 or 30 point down move in the S&P over the summer. I mean,
in a way, it should be maybe interpreted as a good thing, right? Because this means there's a lot of action, a lot of activity, people nibbling, people selling.
Well, certainly we've seen volumes explode over the last couple of days as markets have gyrated, which certainly suggests that there's been some profit taking. I saw a statistic that there was, I think, the largest ever withdrawal from equity funds over the last week or so. So clearly people are in sort of capital preservation mode. And that eventually begets opportunity, whether it's today or whether it's next week or next month. Obviously, we'll only know in the fullness of time. But what's really interesting about the internal market dynamics today is that the best performers were, number one, utilities, which you think of as a classic defensive sector, and number two was technology, which you think of as a classic sort of growth, go, you want to own that when it's going straight up sector. So that I think it's indicative of a little indecision in the market, and maybe that indecision is the prelude to an eventual bottom.